They thought maybe we don't want to pay all this money for Hang Lung. Suddenly we've seen the iron ore price strengthen again, and suddenly it's looking like a good deal.
Yeah, well, I think the reason we haven't seen any competing bids for Sundance Resources has been that massive drop-off in the share price. This has been going on a long time. It's been drawn out through all of 2012, and this was a period where the iron ore price showed some significant weakness, falling as low as $86 through September in 2012. But officials now saying that officials from Hang Lung saying that they are looking to finalise the deal between February 26 through to March 1 in 2013. This is when it's to be completed, and it has been, as you said, a very interesting story. I mean, we've seen delays, there's been problems with securing funding, a dropping iron ore price, and a huge amount of regulatory approval from a lot of different countries to come through for this deal. If you actually have a look at a one-year chart of Sundance Resources, you can see here just how optimism can grow in the share price, and then another delay or a problem, it can grow again, then another problem with funding or an extension to the deadline of when the deal is actually going to go through. But Sundance shareholders, I think the uncertainty about this deal has been reflected in the share price. At the moment, trading around 32 cents, well below the 45-cent offer price, so around a 28% discount there. But I think Sundance shareholders could be a little bit disappointed a competing bid hasn't come through. The environment hasn't been very friendly for that, as I just was mentioned before. But I think this is going to be a significant move by China. This is going to be quite a large project. In the first 10 years, it's going to be producing around 35 million tonnes per annum. They could well become one of the top 10 iron ore producers within the world. It just shows how China is eager, very, very eager to secure inputs, secure commodities, key commodities like iron ore moving forward.
With that eagerness as well, hardly surprising that a whole bunch of people haven't looked to take on China with this type of thing. You need awfully deep pockets to try and match it with some of these Chinese companies to take on an acquisition like this.
That's right. Well, the interesting thing, Hang Lung's actually a private Chinese company, so it's not one of these large state-backed public companies. We have seen them discount the offer price significantly. It was originally 57 cents. That was looking fairly expensive, so maybe that was a reason why other competing bids didn't come through. They couldn't afford to come into a bidding war against a possibly Chinese-backed Chinese company. So here now at 45 cents, you don't often see takeover offers decline.
But we've also got to
shareholders be looking forward to this deal just finally completing.
Tim, I suppose we, in terms of Chinese interest in securing those natural resources you were just speaking about, perhaps the theme for 2013, do you think we'll see more of that kind of thing?
Well, yeah, there's been if you look back at 2012, materials and energy sectors have been big underperformers, and a lot of that is to do with China. But moving into 2013, I think a lot of people are expecting China to start looking upwards, to growth to start improving there, that we've seen a bottoming out in growth. We haven't seen that hard landing. A lot of fears over that hard landing is why we've seen materials and energy underperform so significantly over the past year, but it looks like those fears are behind us. The data we've seen coming out of China recently has been a lot more positive, and moving into 2013 with the amount of spending they're putting into infrastructure there in China, as well as a rebound in the housing market and an improvement just in general investor confidence as the share market rebounds off those low levels we've seen recently, it's going to be a big plus for our miners on the market.
Bodes well, as you say, for commodity prices as a result for our miners. Does that then bode well for the broader index? Because we really have seen through 2012 the material sector very much the missing link in terms of further gains on our market. I mean, it's hard to believe we're up about 15% when you consider all the macro things we are. Imagine if we had some of those miners, the likes of BHP, Rio, helping to underpin more of those gains.
Yeah, I can't agree more, James. It's been a really good year, 2012, considering where we were a year ago in terms of the global picture. I mean, the market, the ASX 200, just on a price basis, is up 15% at the moment for 2012. You can add in equity dividend, which is for the broader market almost up to 5%. So total return close to 20% for 2012, which is an outperformance of the world index. It's in line with the Asian ex-Japan performance across the Asian markets. So I think where we were a year ago with Europe really staring down the barrel, you had Greek bond yields up over 30% for 10-year yields, the Spanish banking system in crisis. 2012 wasn't shaping up to look like a really great year, but it has been a spectacular second half performance, because after we saw the market struggle through the first half, drop off a little bit, it has rallied very strongly in the past 6 months. And as you mentioned, materials and energy have been the big underperformers. Energy was the worst. We've seen that that actually dropped by 2% over the year. Materials only managing a gain of around 1.5% through 2012. And Newcrest Mining, one of the big underperformers there, it's fallen about 24% despite gold prices gaining 5% across 2012. While energy, not surprisingly, underperformed. We've seen the oil price drop 8% across 2012. But the big outperformers of 2012 have been, of course, those high-yielding stocks and defensive sectors. We've seen 175 basis points of easing from the RBA since 2011 in November. So cash rates have fallen significantly. Investors have looked for yield, and that's pushed outperformance in the likes of telecoms up around 30%, boosted by a big performance from Telstra through 2012. The banks have done extremely well. Their dividend yield has really attracted a lot of investors, considering that the credit growth environment in Australia remains quite slow, and earnings growth for the bank through 2012 wasn't anything overly spectacular either. And the property sector and healthcare, those defensive, stable type earnings there, really attracting a lot of investors. Healthcare, the big outperformer for 2012. That sector was up around 46%, really a lot driven by the biggest heavyweight within that sector being CSL, which was up a massive 70% for 2012. A very, very good performance. So for 2013, there will be still a few headwinds, so it would not be surprising to see the market actually underperform 2012 through 2013. The Aussie dollar remains persistently high. I think we'll still see some headwinds from company earnings moving through 2013. I think a lot of analysts are expecting earnings growth of only around 3% for year-on-year for 2013. It will be improvement on 2012, but no big rebounds there. So I think 2012, a very good year considering.